Do I wait 19 seconds in silence? We got to work on that countdown, timer, timing. What's going on, everyone? I hope you are well and doing great. This is Jordan with Conquering the Markets. Looking forward here to our live session, doing what we do best, staying ahead, making sure that we are well positioned. We've said it before so many times, it can never be truer. Knowing when to be in the markets, when to be out of the markets, and on which side is absolutely priceless. CTM, there's a couple of things over the last couple of days that really touched me. Someone yesterday shared in one of the comments on the replay, by the way, big shout out, everyone out on the replay crew. If you're here live, I am so glad that you're here. It is good that you are here. Someone mentioned that listening to the daily sessions gives them so much more confidence. That right there is really, really meaningful. It's amazing what clarity could do. It's very noisy out there. It's very noisy. The more time you spend listening to, and you should consult as many different forms of analysis as possible, because you should be able to filter out the noise. And if you don't know how yet, you need to learn. It's very important. And also, it's very important to really consider those with opposing viewpoints. If someone is telling you that Bitcoin is going down to $10,000, well, then you better understand why. Because it could happen. Seriously. If someone's telling you that Bitcoin's going to make a new all-time high this year, 2023, before the halving, well, then you better know why and understand why they say that. Don't be afraid to look at opposing viewpoints. Welcome them, because either what they're going to do is either firm up your own. They're going to really make you understand that what you believe to be your thesis, your opinion, your view is actually correct or incorrect, and help you form a better opinion. It's all good. It's all important. Someone said that also that they felt like, this was 2 days ago, again, replay crew comment that they felt like the sessions we do here together is like therapy. That's kind of cool. I felt like, you know what? It's getting across then. We're doing a good job. Michelle, I think you're right. I think that it's not looking great, but it could be much worse. And thus far is nothing more than a little scratch. Technically, we are still holding in, right? You can see the green arrow that I'm highlighting over on the price action. And even though we've broken down and lost this important breakout, you can see the resistance above. That resistance goes back further. I'm trying to zoom out over here 1 second. That resistance was over here after Luna collapsed. It bounced up that big wick, and that's where we found support. Once support is broken, it becomes resistance. And you can see price consolidated right below that resistance for a couple of weeks before banging above. And you would like to see structurally for it to hold above. It would be a good sign. However, we talked about ahead of time, look, if we lose that level, if we close below it, which we did yesterday, that's not a breakdown. That takes us neutral. This was a breakout. It's neutral because we need to break down below 27,500 in order to have a breakdown that's likely going to carry us lower and then test this important resistance, which now should be support. And this could be nothing more than actually catching, well, what it did was liquidate a lot of people that were late and heavily long on leverage. I think the greatest so far in 2023 long liquidations have occurred in the past 24 hours. If I'm not right about that, please someone let me know in the comments, but I do believe that to be correct. And then that could be nothing more than clearing out the field in order for us to get a couple of new liquidity, like people shorten over here, and then like we could still hold and resume up and be headed towards the resistance above at 32,000. But you already know that, because why price was up over here and people were taking those late longs, we were talking about what our expectations were and why. Let's take a look here at the norm, what the normies are looking at. CNBC, and they're seeing some red today. Nasdaq futures were down significantly more. They were down about 1% earlier on those Tesla earnings. We saw that Tesla year over year income dropping. They are lowering prices for vehicles. And we also saw this. I mean, everyone's got to love. I love anytime a rocket's blasting off into space. I love it. This was not the best outcome. However, I'm sure there's a lot to learn from it. Anytime when my kids are really young and you see like in the sky, you see the jets and you see like the trails, I always tell them that those are rocket ships. I think it works until they're about 3 years old and then they catch on. But let's look at some probably more important things. First of all, the digital euro could usher in a total state control tyranny. It's getting closer. It's something like some things are going to happen, right? You don't maybe even want to think about them, but it's important to be prepared. Digital euro, getting ready here. You know that Christine Lagarde, she wants to cut off all potential escape hatches, right? I think that the plan is going to be to start with allowing us plebs to purchase or make purchases that are up to 700 euro or 1,000 euro. You can hear, I'm not sure of that exact dollar amount, but I think that like at first, so that like, I guess like, you know how it always works that they tighten the grasp a little at a time and then they keep going. So instead of saying like automatically that like no purchases are allowed whatsoever under a certain dollar amount, like, no buying physical gold, no buying Bitcoin, no buying any type of life raft. And then all of a sudden, across Europe, massive revolts. The French are great at it. The French are always out there protesting and revolting. But no, they are scared of pitchforks. That could really happen. We looked at the Philly Fed business survey unexpectedly. I think that right now we're looking at smart money positioned here for downside. Worst since Lehman. Headlines. This is a good one. If you have the chance to read this, I'll put this into the comments below. A lot of people have been looking at seasonalities. A lot of people are talking about how sell in May and go away is not going to happen this year. If you look, a lot of people are talking about the presidential cycle. If you look at the presidential cycle, though, that comes to an end in April as far as being favorable for equity markets and stock markets. Look, I don't think it's something that you should trade off of, but I do think it helps to be aware of it. And then we have over here, obviously, we saw this morning, jobless claims. Number of Americans claiming jobless benefits hits a 17-month high. That's good news for Jerome Powell and the Fed. It means that they're winning and things are going in their direction. I want to continue looking at the technicals a little bit further. Christine Lagarde. Christine Lagarde. She wants to cut off all avenues for you being able to protect yourself. A lot of people here are very bearish, and also a lot of people still, the title of the video is On the Verge. So we're going to look at the S&P 500. We're going to look at the Nasdaq. They have not hit off any type of sell impulse, but we are seeing cracks form. And I just want to be very clear, while we've gone neutral here, we could still hold. This is a hold, right? If we're able to hold above this level, you could see very clearly that actually sellers here are diminishing. That's why you're seeing higher lows, occur. I always get that wrong. Higher lows occur. And this could be nothing more than getting some people to begin selling over here and then price be able to shoot back up and give it a little bit of rocket fuel to take out that swing high and into the resistance. So we're neutral. What would be or signal to you that you could get back into the market outside of CTM 2.0? But we will look at CTM 2.0 because that is for sure the alpha. A close above that level that we lost yesterday, that would signal that the resumption is beginning and the first opportunity to get back on the right side. Neutral means sidelines. You don't know if we're going back up or if we're going to break down. Neutral is sidelines. By the way, if we do break down, if we have a close below roughly 27,500, that likely is going to bring in this last important repair, the break above 25,000 and change. That's likely where price would be targeting. If that did not hold at that point, I will be talking to you about what is the most important test that is potentially then in play for the bull market breakout. We called the bull market breakout. We therefore get to call when that's in question and when that breaks out, right? Again, up only 2022. What's a 75% correction? It's just running flat. That's nonsense, right? You got to get it right. We want to make sure that we get it right. If we break down and lose 27,500 and start heading towards 25,000, ahead of time, I will make sure that we are prepared for what would be the most important test of the bull market breakout. And at that point, we could go ahead and we could take a deeper look at what it would be like indeed for the bearish case for Bitcoin, just to make sure that we stay on the right side. Sorry about that. So, just preparing you ahead of time. Don't take anything for granted. Clarity is what we're here for. Let's take a look. This is on the linear scale. We're looking right in front of us, but I want to show you that same view from the log. And I just want to show you why. I want to get a little bit right over here. I said 27,500. That indeed would be the breakdown. Now, if I go ahead and I clone this line up one more time, though, all right? You see that? Isn't that cool? Can't you see that? Like, this is where we're finding resistance. Maybe I can move that down a tiny bit more. Now I come off the peak there and then into there, right? Above that line. But I like to give it room. There's no need to I like to give it room. That's why we have 27,500. And by the way, we put that number 27,500 when price was up here. So it's a pretty good estimate on the eyes. And there we are. So, you know, I'm just making sure that the number that we're looking at is correct. By the way, log scale is where it's at. We looked at yesterday how, for example, it was yesterday, the day before. This is like, by the way, you have to be prepared to put the work in each and every day. It doesn't stop over here. You know, if I go zoom out over here and you could see, oh, wow. And we did all that nonsense. So we're not going to do that right now. But I just wanted you to be aware of what we're looking at and why. And now I want to jump over to the Nasdaq and show you a little bit what's going on over here. And in yesterday's stream, we took this line. This is 1 touch, 2 touch. That's our prime trend line. We then took it off and moved it up over here. And you could see that we're testing it. Let me come down to the 8-hour with y'all. You could see that we wicked down below it. Now it's not a close. And that it's on the verge. Verge means like very close to, but has not yet happened. And that's the verge of a breakdown. Closing below there, that would signal to me that we are then in for a potential correction into this area over here. That's about a 4% correction. That's pretty heavy on the Nasdaq. We want to be aware of it. So that's all we need to watch out for. What about on the upside, right? This was the last repair. I don't have a good look on the upside. I know on the S&P 500, it's very clear above 42,000 is a resumption. But I don't have it very clear. This is what I have here for you. I have over here, if I move over to parallel trend line, it looks to me, what does this look like to you? I'll tell you what it looks like to me. That looks to me like a bear flag is forming. That's what it looks like to me. What about on the upside here? Let me try to, I'm trying. Yeah, so the upside I have is much higher. I have really above 13,750. I'm going to draw that in just so that we have it, you know, ahead of time. And that is starting here. This was support, right? That's noise below it. That's on the daily time frame, though. Then we have a touch of that level again, a light touch of it again. Most importantly, in August, that's where price made that high. That's the resistance that I'm looking at above. There's still a lot of space between here and there. And I'm just going to show you how far away we are from where we are today. So that's 4% on the upside, 4% on the downside. That's it. I don't have more. Since this is a repair, I'm looking for where we're wrong, where this breaks down. This is the earliest sign, this trend line I have over here, and this bear flag. And that's it. We want to make, if that happens, by the way, this is the purple line is a major breakout, right? So that should be support until it breaks. If we break below that area that I'm highlighting over here, do we have any big events coming up? Like, I don't know, May 3rd, FOMC. If that were to happen and we broke down below here, that's a major event. That would be a break of double confluence of support, the purple line and this line over here, which is a sell impulse line. So getting below this area, that's when, you want to make sure that you are on the right side if something is happening that is not very good for markets. S&P 500, you could see again very clearly on the verge, close to, has not happened yet. And we are seeing, again, another wick intraday happening. We've talked about it like all week, so I don't need to talk about it again. I wonder if people are being conditioned to buy red, and then that's like just dragging in the retail. That's what I feel like. I really genuinely feel like that. Again, this was the last place. This was late. This was wrong. This was the correct repair. I missed it. This was late. This is where I got on the right side and getting back above. This was take a little profit in this area that we're in right now. This would be exit the full trade, right? Could you sell that? Yeah, that's a breakdown. That's a clean breakdown. On the Nasdaq, that looks like this, just so you're aware. That's this line over here that I keep highlighting. So the S&P 500 would be showing a little bit of weakness ahead of time of the Nasdaq relative. Get above this line over here, though, and then the party continues, has the potential to continue further. The dollar. Let's take a look at the dollar. It could absolutely. It could break either way. A lot of people, Michelle, do not like opaqueness. Like, tell me, it's like, tell me, are we going like straight up or are we going straight down? In between, I don't want to know about it. Markets are difficult. There's no question about that. Big shout out, Seattle. Could it be a bull flag? Let me zoom out a little bit because I missed that and I want to see it. Come back over to the Nasdaq. I was pointing out the bull flag. So as far as a bull flag like this. Yep. So that's good awareness. So I see what you're saying. I see it. Thank you for bringing that into the equation. I'm going to jump down a little bit just to see like the spikes above, right? It's 1, 2. So we go back to the top ones. No question about it. And then let me draw this line in for us as a little bit of an assistance about when we potentially would be breaking out and resuming up. That makes this a little bit easier and a little bit nicer if we get a breakout in this area, then targeting towards that resistance. For those that are short-term minded on the Nasdaq S&P 500, that's a decent move and a decent play. Really good awareness. A break above there, that's likely taking us into the resistance above. Thank you for the huge assist. That's a good look over there. And that makes me really happy. Anytime I have more clarity, I like that. It brings a smile into my face. I'm looking for clarity. Doom. CTM. Strong. Unprecedented times. Now's the time to really be putting in the work. Dollar. Let's take a look at the dollar. The dollar, as you know, we're lining up this buy impulse, right? Didn't close above it yet, and now we have this resistance above. So one of two things over here. Let me jump down to the 8 hour. So and I need to look at it. I don't know. I do know that we need to clear above this to be looking at any type of buy taking place. Below that, that's resistance. We continue the downtrend and the momentum. Momentum is for sure this way. We do have coming up next week a potential Bank of Japan. Let me just get into where we are. So we have next week, we have on Thursday, Bank of Japan, and that could be something that directly moves and affects the dollar. And then after that, of course, we have Jay Powell getting ready for the FOMC on May the 3rd. Expectations are still strongly favoring a 25 basis point hike. There's not too much out on the calendar that could change that. The only thing that could likely change that, in my opinion, would be the Wall Street Journal leak ahead of the meeting. And thus far, that is the last hike of the cycle being priced in, subject to change and subject to what Jay Powell has to say. So that's where we are for that. Coming back to the dollar, it's all dollar related. Do you do this though? And this is my question. Do you then, like, I could see the resistance above. We had a touch there. Am I moving this like this? And when I do that, I could then see the other candle here. Not wrong, but still into the resistance. So I'm not really sure about that. So I'm leaving the yellow line here because it's above that. At this, if anything happened in the next day or two above that, that would be the signal. The lower we get down into this area of support without breaking it, and then if we break above this, that opens up the opportunity here to manage risk a little bit better and take it. So we'll keep this like it's not so clear, but in each session that we move forward with, it's something that we'll consider and look at it in real time. Yeah, I'll show you Tesla in very quickly. You know, we'll get to that. All right, we will get to that in a little bit. Yields here coming off today. You know, I don't know what else to add about that. You know, they don't. That's it. That's it. Big thing though to talk about is oil. And oil. So first of all, this was a close above this area, and this was a bullish event. The way that I called it, I think it's wrong. I'll show you why, but that's the way I called it, and it's wrong. Or not wrong, but wrong. It didn't play out, you could say. And then you got to get back on the, I'm not going to say that close, but by this close, you got to get back on the right side. That's fine. There's nothing wrong with taking losses. Actually, the more small losses you take, so long as you're able to push your winners, you're going to be more than okay. You're going to do great for sure. But I think that this could have been done a little bit better, and I'm going to move that line up just to where we topped out, just to give you a look. And then I could say, well, that was clear resistance. We were forming support in that level. I know it's not easy over here, but I think it was maybe a bad move. And also at the same time, I could see that the market was paying attention to that level, likely what I was paying attention to. So it's not easy, and there's nothing easy about it. And likely what I should have done, or would have been better, is something like just giving it a little bit of room like that. But I didn't, and that's where I had it, and that's where I'm wrong. This would send you back to neutral once you close below the line that I did have over here. But a breakdown below this trend line, that's a sell event. So watch oil over here. Oil is why neutral right now could break down. So, and that would be good news as far as I'm concerned, because I'm not a fan of inflation, and high energy prices begets inflation. So I would be very happy with the Fed looking forward, and that they are watching the price of crude oil. We pointed that out from the meeting minutes back in October or September, after we had been talking about it. They are watching it because higher oil prices will cause higher headline inflation prints. And if that comes off, that's really good news. I mean, is that signaling a global slowdown? Likely. Does that mean that OPEC will come out with further production cuts? Likely. Does that give the opportunity for the U.S. to refill their strategic petroleum reserves at lower prices. That's good news. I would really prefer that than them having to do it at higher prices. But we could hold here, right, Michelle? We could hold here. And if we hold here, I'm just going to raise this up. And okay, wrong, but I want to get right. And that a break above there, right? That would, or I mean, maybe that could be looked at in a different view. My whole thing over here was avoiding being chopped around. Sell. That's a bad gap. What else could you do about it? I didn't know that OPEC was going to come out with production cuts. But yeah, I think it remains the same. And again, trying to avoid being chopped out. If I was like trading crude oil futures on a very small time frame, then if this support held and price resumed off of it, well, that would give me a place to go ahead and buy, targeting some first take profit into the resistance with a stop loss under there. But I'm not. I'm looking at this for macro purposes to follow what's going on there with the bigger picture as far as the macro is concerned. So the dollar, oil, interesting levels. Nasdaq, once again, able to brush off red. Whether or not it closes green or not remains to be seen. Thus far, crypto is not really participating in that. And why I consider this to be noise, I just want to be clear. It did show that at that particular moment, Bitcoin was a bit overbought. And we are seeing a bit of a reversion down towards the mean. And then this one I do consider to be signal. Until inflation is no longer a concern, then I think that this correlation or inverse correlation is going to hold very tightly. When the time comes, those banksters are talking about a couple of more years before inflation has returned to 2%. So, but when the day comes that inflation is under control, assuming that it does, I mean, who knows? 2 years is a long time in these unprecedented times. I could imagine that things could break. And if things broke, that they would have to come in with a tidal wave of liquidity. And if they come in with a tidal wave of liquidity, I do not think that inflation is going to come back down to 2% in 2 years. But they tell you whatever. If it does, though, at this point in time, this correlation breaks. Right now, it's highly relevant. And Bitcoin over here was showing that, once again, it was wrong, catching up here. And that, I think, is much more signal than global liquidity. We're watching the breakout watch for the cup and handle on the monthly time frame of gold. Right now, we got to get above this lip over here. Right? And we still have not had a close above it. We continue to watch it. And we will continue to watch for what happens. Inflation and oil, I think, are two big drivers here right now of the gold market. Should oil consumers buy long futures similar to how oil products? Mike. Oh, I don't know. I think you follow the technicals. I wouldn't be buying oil here. Right? We could have a breakdown. We have the red line above here. And if price is able to close above that red line, that would signal that likely we could see a move towards this resistance above. If that resistance broke above, then oil could be really making a move to the upside. But I don't think that the macro so much aligns with that. It appears that why people thought in 2022 that we were going to enter into recession and things were going to break. And we're like, that seems a little early. I think the economy's a lot stronger than people think. I think it's going to take a lot longer than people think. I think now, like, the countdown is like, now that I could see all that happening. So I don't know if this is the time to be long oil, but we'll follow the technicals. And that's the most important, right? And right now you're neutral. You're neutral here right now. Short, long, get back on the right side. And that's where we are right now. Bitcoin and oil. It's not something we've looked at in a minute. ever since the breakdown over here, actually. But I think that I want to go ahead and just take a look. And I'm going to start just by giving myself some room. A breakout over here, that would signal that we are looking at significantly lower Bitcoin prices. I want to just go ahead and check that. I want to see if this is the structure of the market or not, just to know if my line is right or wrong. Yeah, it is. It really is. It's so weird how and why markets do that, but they do. So let's take a look at what's going on across the board. CTM, just the massive work taking place on the Summit team. I mean specifically the SIB, Flavors, Frav, TK3 right now. It takes different people at different times really take the ball. And I've been watching over the last couple of weeks all the activity taking place. We're headed up into the mountains this afternoon, but I'm going to set aside a big block of time to really go over, absorb, review all the work taking place, and then we'll be able to see what direction to continue moving in over here. The work that takes place, right? TK3. Andrew, by the way, lots of love. Big shout out. Love to get others involved, whether it's Fisher King, Michael, Gav, everyone here. I want to find out where the next burst is coming from, and then we could all bring it back and forward. But I really wanted to show, beautiful, beautiful things happening over there. I wanted to take a look at what's happening with Ethereum, Bitcoin. Banksters, gangsters. Them banksters are gangsters. All right, we're really, this is a bigger picture here, Ethereum, Bitcoin, and we are really, really running down within this channel. A breakout of a downward sloping channel, that's a bullish event. When that happens, we are going to see, I think that we're going to see a bigger alt season taking place. Until then, trends remained in place, and right now, from cycle perspective, from a macro perspective, as far as the overall economy, and from a 4-year cycle perspective, now is the time when Bitcoin dominance remains supreme. This would be the first indication that we're seeing something adversely happen, differently happen. I know people are edgy for alt season to take place, but alt season again is not when alts are bleeding versus the dollar. It's when they're making big gains versus the dollar and also Bitcoin. You could see that we were watching, someone brought to our attention that neckline from this inverse head and shoulders, right? A head and shoulders pattern is a left shoulder, it's a head, and it's a right shoulder. And then, so it's head and shoulders. And then you have the neckline, and when that breaks, that is a negative pattern. That's a topping pattern. So the inverse is just the head is upside down, and then you have the left shoulder and the right shoulder, and here's the neckline. And we were talking about this other day because people were saying, we broke out. Are we targeting, I forget what they said, like 65 cents or we're 70 cents? And we said, well, it's not always that easy. Sometimes you could break down from the neckline and then even break back above. Look at that. We have days later the breakdown. And it's not so easy. And Cardano on the 8-hour CTM 2.0, it remains holding an open long. And unfortunately, that long could even turn into a loss. We're still a bit of a ways from clearing this trade, exiting this trade. It is what it is, and that's what it is. However, Ethereum, Bitcoin here, we talked about that was a nice exit. And in hindsight, it was a beautiful exit. People did not like seeing Ethereum exit yesterday, right? And Ethereum, by the way, fantastic job. This is not on 2023, 25%. It's actually 18% because it was just before this last trade that there was an upgrade. The stop loss was changed. So actually, it's like 18 and change for the year. But again, people are very focused on the individual trade. Ethereum here exiting the trade and taking a nice little gain out of the market, 6.8%. It adds up. And then Bitcoin here, Ethereum here after that, then like coming in for a bounce. And people are always focused on the what is happening right now. Oh, did I just exit at the bottom? Is price now going to shoot back? If price shoots back up, you're going to get long very quickly. If momentum is able to kick back up, you're going to get long very quickly. Stop thinking about any one individual trade. By the way, there's no way if you were following that you would have gotten long and held that long as we did over here. And you got to play the long game. The long game says that at least 6 out of 10 trades are going to get stopped out. And it's small wins and small losses. 6.8 is a very small win. It's a very small win. Let me just come back over here and let me just show you. Let's come back not too far. The last 3 years. Nothing special about the price action. But I want to show you what like small gains and small losses are. So you're looking at 18,000% return, less than a 15% drawdown, and the win rate is under 40%. But look at this. You're looking at small losses, right? Small losses, small gains. And then small gains, smaller losses. And then you have these periods where you put up bigger gains. 20%, 92%, 40%. Hey, do you get a 90% gain or a 40% gain if you're taking 10% profits? 50% gain. Oh, look at the losses. Small. Gains are big. Losses 40% gain. You don't 40% gain. I sound like a broken record, And the overall win ratio here, if you look at it, not the win ratio, the average win to the average loss. So average losing trade, 2.4%. Average winning trade, 25%. So what is that, a 5-to-1 risk to reward ratio? That's where you want to be at. That's why any individual trade is unimportant. So if you exit here, and even though Ethereum went on to continue lower, if it had resumed up, you can't be like, oh, I exited too soon. You should be like, no, I just, I did what I'm supposed to do. Banged an 8% profit, took out an 8% profit, but more importantly, I'm following the system. I'm not attached to any individual trade, and I know that if we shoot back up over here, I'm going to get back into the trade. Bitcoin also, if Bitcoin holds this area that we were looking at earlier and resumes above that magic line over there, because this is still neutral. This isn't a bearish event yet. And we're able to shoot back above, very quickly, you're going to see Bitcoin here resuming back to the upside. But in the meantime, it's keeping you safe and protected. If you have not yet smacked the like button, please go ahead and do so. Cardano has a drawdown 35 cents from position highs, then went on to put in 150% booked profit. What's 150% amongst friends? Oh, yeah, Ace. That was the thing I was thinking earlier this morning. When I was thinking about exactly what we're talking about, we're just on the same wavelength. When I was thinking about not being in any one individual trade, or how any one individual trade doesn't matter, and why this particular one trade, Ethereum has thus far, after like people seeing the spike up and they're like, oh, it's going straight up and I want to be in it. And then then there's a big wick down and it's back down. Like, oh, okay, I'm glad I exited. it doesn't matter. It's one trade. You're not going to be roaring in the bliss as, new all account highs are made. If you start making whimsical decisions, you got to stick to it. That's the whole point of what we do here, putting in the work each and every day. You all already know this, right? And that's the importance of us maintaining that commitment, maintaining that discipline that's needed, the mindset, and focusing in on where it matters most. Once you have a winning edge in place, it all comes down to execution. By the way, some people and a lot of people, they're always interested in what's next. If you go back in the Nuggets channel, you come back to February. Yeah, I mean, this is just one example. But what is the best portfolio allocation? It is a gem. If you are new here, please go ahead and watch this one. By the way, you will get even a greater insight to what exactly CTM is and this team that you're working with. But go ahead and watch this video today for sure. And that's just, look, all of these are nuggets and nuggets for a reason. And they continue. Like, they're nuggets for a reason. That means that they are highly valued nuggets that were shared in the stream. Go ahead and watch that one. Start with that one. That was, yeah. That's mine. Powell's like, wait a second. Do not spill the beans of what's ahead. And then we see daily time frame doing its thing over here. And just continues to hold on. And in 2023, for this short period here, this first quarter, the daily time frame on Ethereum is even outperforming the 8-hour. That doesn't normally last, right? 8-hour time frame doing its thing. Oh, that's the pro shares. I'm like, that's not right. What's going on with that? Bitcoin doing its thing over here for sure. The daily, though, has booked, right? In 2023, booked. Sorry about that. Should have had that queued up better. 20%, but holding open. Well, so they're about the same. All right. Well, someone was asking about Tesla. By the way, TQQQ has us here on the sidelines. We are looking at the Nasdaq breaking up right now as we speak. I want to take a look at that line. Neutral, FNGU, neutral over here. And Tesla is neutral as well. Ahead of those earnings was neutral. Some of you, not myself, were looking at the inverse ETF over here, Bear Daily ETF on Tesla. And that caught the move before the earnings. That currently up 11%. I have nothing to do with that. That was some of you all. Let's go ahead and take a look at the Nasdaq. It looks like it seems to be moving over here, coming back towards turning green first of all. Dollar off its lows though. Yields at their lows. Look, Michelle put in the line over here, the green line. A close above that. That's a bullish event. That would be an extension upwards after consolidation, and that could potentially be targeting next the green line of resistance above. But you got to close above it to be there. I am surprised at the resiliency here of the equity markets, of the Nasdaq, putting in all of these red teaser days. Over the last 10 days, you have 1, 2, 3, 4, 5, 6, and potentially 7. I mean, it's hard to argue with price action, but you got to follow the technicals, consolidation occurring, whether or not it's a bear flag or a bull flag. It's a bear flag. It's a bear flag within a bull flag. The breakout over here to the upside is the green line. The breakdown over here is going to be a close below, right where I'm highlighting right now. Chicken nuggets. The question, you didn't miss anything unless they are homemade chicken nuggets. Have you heard what McDonald's actually puts inside the chicken nuggets? I know the sauces are enticing. I know the sauces are enticing, but eat at your own risk. CTM 2.0 is like noise canceling headphones. It ignores the drama and emotions that takes place on every time frame within the markets. Another great exercise is not only going back and watching, for example, what is the best portfolio allocation. Search Flavorous Fravs, and like if you want, like you know Mark Douglas, Trading in the Zone, really good coach for trading discipline and mindset. Not, I mean, second to none. Go ahead and research that, Flavorous Frav, and find out all of those nuggets as well. Those are good exercises. I'm going to be doing my own. I'm going to be doing and catching up over here everything that the Summit team has been putting together, and to see what's the best direction to continue with that. Which could be better, to have Bitcoin 2K, Cardano 2K, if both go to all-time highs. So you never know whether or not anything, including Bitcoin, will go to an all-time high. Look, whether you want to hear that or not, that doesn't matter. You don't know whether or not Bitcoin or anything else will go to an all-time high. And that's the fault of a dollar cost averaging strategy. Truly. I mean, if you load up your bags and Cardano, goes to $5, great. And believe me, I root for you and I root for it. But that's not a strategy. Well, it's not a high probability strategy, at least I should say. The thing about CTM 2.0 is that if you were dollar cost averaging, let's start at the top of the bear market, right? We're talking November 2021. And if you are dollar cost averaging into Bitcoin since the top of the bear market, you're doing okay. You're above water now, right? I don't have the math queued up. I have some presentations prepared for you, so we could get accurate. But if you were, since November, dollar cost averaging on a monthly or weekly basis, you're now above water. You've recently become above water. And if price goes down a few $1,000s, maybe that changes. But right now, you're above water. If you are trading CTM 2.0 just on the buy side, forget the buy and sell side, like long side only, buy side only strategy. Okay, well, you're up 13% and you're holding an open position now 17% into profit. So what's better, getting down to break even or preserving all of your purchasing power and being on the upside? By the way, for those that I know, dollar cost averaging will bring down your average purchasing cost, but it does take from a 75% drawdown a 400% gain just to get back to break even. So the thing about the difference is, though, if you're dollar cost averaging and you get back to break even and then something happens, whether it's on Bitcoin or Cardano or Monkey Coin, and it goes down to zero and or never makes another new all-time high, like you're still in that position. If you're in CTM 2.0 and you get out and dump into the market, up 4% loss, out of the market, dump, you're safe and protected. That's a strategy that just takes something that's highly something incredibly difficult, the markets, and puts a greater degree of probability in your side. And some people are dollar cost averaging into Bitcoin, and that's their plan. That's their nest egg. That's what they're really betting on, because if they look around and they see that, like, man, these gangster banksters are devaluing the currency. I'm being killed through taxes, through inflation. They're killing small businesses. They make it difficult. Man, try like paying for your own healthcare and insurance if you're self-employed. They just make everything impossible. And my only hope is that Bitcoin does Bitcoin things. Well, yes, Bitcoin is hope. And if Bitcoin does Bitcoin things, regardless of what Christine wants for us, We do have that lifeboat. But the thing is that you could do more to put favorable probabilities in your favor that are going to help you as the next 10 years happen, be in a significant better position and a position of power. So that's how we'll end today's notes. Can you show the buy and hold? So if we do the buy and hold from this particular area that we're looking at, I'm going to jump over here and go down over here to the buy and hold. We have a minus 55% return. The good thing about a minus 55 to a minus 75 is it only takes what to recover from a minus 55% return, 100% gain. So, but yeah, that down significantly, Ace, for sure. And that type of perspective is important because people don't really consider, all, like we talked about in the very beginning, consider all views and either help them firm up your own, learn something new, or decide that you had an error in the way that you were viewing things and seeing things. Because it's really easy when someone out there is just like, you know, and buy dollar cost averaging, like if Bitcoin does Bitcoin things, is like, it's a good strategy. It could change a lot of people's lives. And for a lot of people, especially those that are unwilling to put in time and work, like it's probably better than a lot of other things. But whether you're talking about equity markets, people dollar cost averaging into the S&P 500 or the Nasdaq, like, well, if you did that in the 1980s in the Nikkei, the Japanese stock market, that didn't really work out well at all for the next 20 years. And unless you got decades to waste, then you want to make sure that you're really thinking about what could potentially happen. Thank you, Joseph. I really enjoyed it. If you did not get the opportunity to just hit the like button on your way out today, please go ahead and hit it. Or if you're on the replay crew, please go ahead and hit that like button. Great assist over here on the bull flag. Here's the bottom of the blue flag. And that's consolidating very nicely. Within the bear flag, be prepared for all outcomes. And then I simplify it down. See, it gets really hard. If you're just looking at this chart, you might be like, what's going on? The most important thing on this chart for me, or the few most important things, is this line over here, because that's where we're wrong. That's a sell impulse triggering, and that could have dire consequences. The next most important thing is the purple line. That's our latest breakout, right? Top, breakout, retest, resumption up. This is bullish. We're bullish on the equity markets. This was the other most important thing. This was the bear market trend line. This was from the 2022 high, the late March, early April high. And then I'm looking at that and I'm saying, what's going on? Shouldn't have been on log for that one. And maybe, I don't know. I'm going to go back to the drawing board over there. The bear market breakout trend line was the first repair, second repair, bullish. And then this is showing the green line where we could be potentially resuming upwards out of this consolidation, targeting the next area of resistance. And then this one line is simply taking this line I have over here and moving it over. And that's showing a close below. That would be a breakdown. And then us targeting that last breakout, which that resistance should be support. Woo! Samuel, there is below in the description information on how you could join CTM and the team. There is nothing else like it. What we have built is absolutely extraordinary. The people involved, there's a saying that like-minded people attract like-minded people. I'm surrounded by the most incredible people I know. If you are interested, join us. That's all I could say. If you are interested, join us. If not, there's a wealth of education shared in each and every live stream. And that's for everyone. That's for you. I hope that we have been able to keep people. I know we have. Again, those comments, Jordan, watching these streams every day, I have so much more confidence. I understand if people are there wanting to put the work in. The markets are incredibly difficult. You've chosen one of the most difficult things there is. The brightest minds in the world competing over capital in the arena of the capital markets. Do not think there's anything easy about it. Put the work in. Surround yourself by people who are going to help not only sharpen your own abilities, but take you further than you ever would have got on your own. All right, everyone. That's it for today. I'm headed up to the mountains. I'll see you all tomorrow. Have a beautiful day, everyone. Thanks for being here. God bless you.